How to become a millionaire, index fund investing for beginners. Today's video is really exciting. I'm going to break down the actual math on how you can become a millionaire through investing in index funds. I am Tiffany Thomas, your wealth mentor. I achieved financial freedom in my 30s and became a millionaire at 40. I'm here to help you do that even earlier and easier. Let's dive right in. All right, if you are ready to chart your course to millionaire status, then make sure and stick around until the very end of the video because I'm going to show you exactly how you can do this by investing very simply with index funds. All right, the first item that I want to talk about is to explain what an index fund is. An index fund is actually a type of mutual fund. There are two main types of mutual funds. One is an actively managed mutual fund, and then the other is an index fund. With actively managed mutual funds, they have someone that is actually managing that fund. They have a person doing this. So it is going to cost more to invest in an actively managed mutual fund. With an index fund, the fund is tracking some sort of index, so it is going to be a lot less expensive to invest in an index fund. And studies have been done that show by investing in an actively managed mutual fund does not outperform investing in an index fund. So I personally like investing in index funds. They are very low cost and they still get you really good returns. And like I mentioned, they are tracking some sort of index. For example, they could be tracking the S&P 500, or they could be tracking the US total stock market, or they could even be tracking a healthcare segment or a technology sector. There are a number of different index funds out there that we can choose. And when we are looking at these index funds, we want to make sure that we know the expense ratio tied to the index fund. We want to keep that as low as possible so that we can keep as much of our own money as possible. And let me just show you a quick list of some examples of index funds. Okay, I went to Vanguard.com. And I'm going to click on what we offer, and then I'm going to click on mutual funds, and then I'm going to click on view all Vanguard mutual funds. And then I'm going to click on management style, and we can click on index right here. And then it's going to filter and just show us index funds. So you can see the VFIAX, the 500 index fund Admiral shares. This is going to be tracking the S&P 500. And we can see over to the right, we can look at the expense ratio column and see what the expense ratio is. So this one is 0.04%, which is really, really good. And then we can go down to the next one, the balanced index fund Admiral shares at 0.07% expense ratio. And if we come down here a little bit further, we can just take a look and see all of the different index funds that they offer. So you can take your pick on which one you want to select. And if you want to know what my favorite index fund is, I have another video about that. I will leave a link above. You can check it out later on. The nice thing about index funds is that they are great for beginner investors and experienced investors because they make it really, really simple to get a large diversification within your investing without having to buy a lot of different companies individually. So by purchasing just one single fund, you are investing in a lot of companies inside of just that one fund. And then the second part that I want to talk about is setting up your foundations. You want to make sure that you are ready to invest. So you want to have your high interest debt paid off. And I would say any interest rate that is 8% or higher, I would pay that off and then I would start investing my money. Because if you have a debt that is 18% interest, there's no guarantee you're going to earn over 18% by investing your money. On average, the US stock market returns 10%. And then if we adjust that for inflation, which is usually 3%, we're going to be getting a 7% return in the stock market. So make sure that you have your high interest debt paid off. And then also I would make sure that I have an emergency fund set up. And I would say you could set aside 3 to 6 months worth of your expenses in a high yield savings account. If we're leaving our money just sitting in a savings, we want to make sure that it is earning as much money as possible. So I would put it in a high yield savings account. I personally like using Ally. They have just over a 4% interest rate right now. Because if we don't have an emergency fund set up and we invest our money and the market tanks and we need that money, then we're going to have to lock in our losses and pull our money out of our investments. But if we have an emergency fund and an emergency does happen, then we can just pull it out of our savings account and pay for that emergency. And then also make sure that you have set your investing goal. What is the reason you are investing? Is it to retire at a certain age with a certain amount? We want to be very specific, and that way it's going to make it a lot easier for us to choose our investments. And then the third item I want to bring up is to invest consistently. If we can continue to invest our money every single month or every 2 weeks, we are going to make a lot more money because of compound interest. And we can also utilize the dollar cost averaging strategy. We can select a certain amount to invest every single month into a certain investment. And that way we're not so worried about the price of our investment. We can invest when it is high, when it is low, when it's in the middle, and it's not a big deal because we are dollar cost averaging. We are averaging the cost of our investment out over time. And that way we aren't using our emotions to invest our money, because if we see the investment has dropped significantly, we may get nervous and pull our money out. Or we may think, oh, I want to wait a little bit longer until it drops a little bit more. But then it comes back up and we missed out on that gain. If we can have that consistent investment every single month or however often you want to do it, it's going to make it a lot easier on ourselves. And we are going to make a lot more money because we don't want to try to time the market. We want to have time in the market. And now I want to show you a calculator so that you can see exactly how you can become a millionaire by investing in index funds. Okay, we are going to say that we are starting with $35,000. Let's say we have a chunk of change sitting in our savings account that is not for our emergency fund. And then we are going to invest $1,000 a month. And we're going to say that we are getting a 10% rate of return. That's pretty average for the US stock market. So if we choose an index fund that is tracking the US stock market, then we're able to use that 10% return. And we're going to say that we will invest for a period of 20 years. You can see right here, we would have over $1 million. We would be a millionaire. We would have $1,015,851. You can see all of this green part is that compound interest. That is money we did not put in. And we can see this blue amount is the contribution amount we are making every single month. And then you can see this purple amount at the bottom, that was our initial amount that we put in, that $35,000. So you can see how much more the compound interest is versus what we put in. And let's just play around with this calculator. Maybe we don't have $35,000 to invest right away. Maybe we only have $10,000 to invest. So let's put $10,000. And then let's say we are going to invest $2,000 per month. So if we did that for a period of 20 years, we would have $1,592,018. So maybe if we didn't want to invest for a period of 20 years, we could bring that down to 17 years. We would still be a millionaire, $1,118,881. And maybe we don't plan on retiring until age 65. And we don't have anything to invest right now. And we're going to change this back to $1,000 a month. So let's say we have 30 years until we turn age 65. Then after 30 years, we would have over $2 million, $2,260,488. You can see with that calculator, if we're able to simply invest our money in an index fund and continue to do that over the long term, we are going to become a millionaire. And another point that I want to bring up about investing in an index fund is that we can automate this process. You want to make sure that the brokerage firm that you choose offers automation, but a lot of them do, so just double check that. But we can set up that auto transfer from our checking every single month, and we can have it go directly into our index fund inside of our investment account every single month. And that way we don't have to worry about doing this. We can become an automatic millionaire. And of course, the more that we can invest, the sooner we are going to build up to that millionaire status. And remember to keep that long-term mindset. If we are starting with a really small amount, we might get discouraged if we aren't seeing our investment grow as quickly as we would like. because in the short term, the stock market goes up and down, but over the long term, it goes up. But if we are thinking, oh, my investment isn't growing that much, I'm just going to give up and stop investing for a while, then we are not going to be able to take as much of an advantage of compound interest, because the more that we can put in the earlier, then the more compound interest is going to work in our favor. So don't get discouraged if you're not seeing your investments grow as quickly as you would like. Know that over the long term, they will definitely grow, and you will be grateful for the money that you put in when you did. I know I have seen this in my own life. When I started investing, I was really nervous about doing that. So I took one small step and bought just one share of one stock, and then I bought another share of another stock, and then I continued to build up over time. And I am so glad I did that. And of course, I wish that I would have put more in even earlier. But I did what I could and still was able to become a millionaire. And if you do want help investing in the stock market, in index funds, I have a free masterclass where I go over how I can help you do that. I will leave a link below in the description. You can click on that and check out the free masterclass. Comment below and tell me if you are going to become a millionaire by investing in index funds. I am curious to know. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel, and hit the little bell to get notified on when I post new videos. And if you want to see even more great content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.